The rise of the Titans, ETFs scale new heights in 2023. Driven by surging equity markets and a persistent appetite for low-cost, diversified investment vehicles, the exchange-traded fund, ETF, industry ascended to unprecedented heights in 2023. Crossing the $11.6 trillion mark in total assets, this dynamic corner of the financial landscape witnessed record inflows, eclipsing traditional mutual funds, and cementing its status as a go-to choice for investors of all stripes. This article delves into the forces fueling this meteoric rise, dissects the evolving ETF landscape, and explores the implications for future market dynamics. A perfect storm for ETF growth. Several factors coalesced to propel the ETF industry forward in 2023. 1. Equity market surge. A buoyant bull market provided fertile ground for all investments, attracting significant capital inflows. ETFs, with their inherent diversification and access to diverse asset classes, benefited directly from this positive sentiment. 2. Demand for diversification. Investors, wary of single stock concentration, increasingly sought broader market exposure. ETFs, offering baskets of securities across sectors and industries, perfectly fit this need, providing instant diversification at minimal cost. 3. Lower fees and transparency. Compared to traditional actively managed funds, ETFs boast lower expense ratios and greater transparency regarding underlying holdings. This cost efficiency and clarity resonated with investors seeking value and control over their investments. 4. Innovation and expansion. The ETF universe witnessed tremendous innovation in 2023, with the launch of novel thematic ETFs focusing on niche sectors like clean energy, cybersecurity, and artificial intelligence. This catered to investor interest in specific trends and captured previously untapped market segments. 5. Accessibility and convenience. ETFs trade like individual stocks, making them readily accessible to retail investors through online platforms. This ease of use, coupled with fractional share trading options, further democratized access to sophisticated investment strategies. Beyond the headlines, dissecting the ETF landscape. While the headline growth figures paint a compelling picture, a closer look reveals the multifaceted nature of the ETF ecosystem. 1. The rise of active ETFs. Traditionally dominated by passive index tracking funds, 2023 saw a surge in active ETF inflows. These strategies, employing active management styles within the ETF framework, cater to investors seeking alpha generation while retaining the benefits of the ETF structure. 2. Thematic ETFs take center stage. Niche-focused thematic ETFs catering to specific growth sectors or investment philosophies like ESG, environmental, social, and governance, witnessed explosive growth in 2023. This trend highlights the increasing demand for targeted exposure to megatrends shaping the future economy. 3. Fixed income ETFs gain traction. Traditionally dominated by equity-based offerings, the fixed income ETF segment saw significant growth in 2023. Investors seeking exposure to bonds and other income-generating assets increasingly turned to these offerings for their liquidity and diversification benefits. 4. Technology disrupts distribution. Traditional distribution channels are being challenged by fintech platforms offering commission-free ETF trading and educational resources. This democratization of access paves the way for broader investor participation and further fuels industry growth. Looking ahead, the future of ETFs. The ETF industry's momentum is unlikely to falter, suggesting a continued ascent in the years to come. 1. Continued innovation. Expect further diversification in the ETF universe, with niche offerings targeting specific industries, geographic regions, and investment strategies. This caters to increasingly sophisticated investor demands and preferences. 2. Technology integration. The role of technology is poised to expand, with AI-powered investment tools and robo-advisors incorporating ETFs into their strategies. This will further streamline the investment process and make sophisticated portfolio construction accessible to a wider audience. 3. Regulatory scrutiny. As the industry grows, regulatory oversight is likely to increase. Focus areas might include liquidity issues in niche ETFs, potential market manipulation through concentrated holdings, and ensuring transparency in actively managed offerings. 4. Geopolitical and economic headwinds. While ETFs offer resilience in turbulent markets, unforeseen geopolitical or economic disruptions could impact overall investor sentiment and temporarily dampen industry growth. Conclusion: a new era for investing. The ETF industry's ascent in 2023 is a testament to its inherent value proposition of low cost, diversification, and accessibility. As the industry continues to innovate and adapt, it is poised to play an increasingly prominent role in shaping the future of how individuals and institutions invest. From capturing megatrends to democratizing access to sophisticated strategies, ETFs stand poised to redefine the investment landscape for years to come.